Well, folks, I have some major moves coming to the public account. $3 million plus portfolio. I got some major stocks I'm going to be selling, some major stocks I'm going to be buying, holding throughout 2025. We're going to go through my entire game plan in this video here today on what stocks I'm planning on selling, holding, buying, all those sorts of things. So it's going to be an action-packed video in regards to that. Now, at the top of this video, before we get into that, obviously, transfer of power here today. President Trump is now officially the president once again. So at the top of this video, I want to tell you, am I as optimistic about Trump 2.0 as I was Trump 1.0? Why and why not? So we'll discuss that on the economic side, on the stock market side in this video, if I'm as optimistic or not, okay? Now, the thing that actually went the most viral today actually had nothing to do with Trump at the inauguration. It was actually Zuckerberg got caught taking a little peek at, let's call it Jeff Bezos' fiance, wife, whatever it is now at this point in time. But yeah, he was taking a little peeky boo, so that went viral all over the internet. I'm sure you guys have seen that here today. And you know, listen, let me put you guys on some game here, okay? So some people said, oh, you know, Bezos isn't going to be happy with Zuckerberg. They're going to get in an octagon fight. And I'm like, wait. Let me put you guys on some game here, okay? Listen. Most guys, yes, they think like that. Like, if you check out their woman, they want to fight you. They got problems with that. That creeps them out, right? They don't like that. But some guys are into that. So they purposely have their girlfriends or wives dress extra, let's call it S-word, right? So then other guys are looking at them, and some guys get turned on by other guys looking at their woman, right? And then some women love that attention. Not all women, but some women love that attention from all the guys looking at them. So if I had to guess, Jeff Bezos strongly encourages this woman to dress like that. He likes it when, let's call it, other guys are checking his woman out, okay? So just understand that. You know, I appreciate the innocent minds out there, but I just gotta tell people, like, no, it's not what you think. It's not what you think, okay? Let's just put it that way. And hey, listen, 3 of my biggest positions are probably, you know, pervs, okay? So we got Zuckerberg looking down the, you know, the woman's shirt. Elon wants to get every woman in the world pregnant, and then we got Bezos who's into some stuff. Let's just put it that way. So listen, as long as they execute, that's all I personally care about. If you guys saw my video, 16 years of stock market advice in 52 minutes, what was the most important thing I told you guys? Having a perv as a CEO is extremely important. Okay, that was not one of those things, but that is a legendary video. Check that out sometime if you get a chance, okay? Appreciate you guys for joining me. Action-packed one here today. All I ask from you guys, one thing only. Smash that like button. I need you to do it. Hey, it takes you 1 second. Come on, you could do it right now. Please, okay? Please, I beg you, okay? Don't make me have Bezos and Zuckerberg come over to your house, okay? Just smash the like button, hit subscribe, and then we can go on from there, okay? Alrighty, guys. So, how am I feeling about Trump's presidency in all you know, seriousness here? Am I optimistic, not optimistic? So I did a very lengthy post on X today. We're now well over 40,000 subscribers on X, so definitely running up the follower count pretty quickly here on X. I've started taking that more serious really in the past like 6 to 12 months, okay? So here's what I said. I said, I'm so sorry for what I'm about to say. As I know, a lot of people are super optimistic about today and the transfer of power, and I definitely saw it. Like, you know, a lot of people have that sentiment of like, America's back, baby. You know, we're going to get back on the right track. You know, it's only up from here. Like, you know, a lot of optimism. And that happens every time there's a presidency, right? When Biden got in office, there was a lot of optimism, but it was from a different crowd than certainly the crowd that's very optimistic today, right? Same thing when Obama got in office. Same thing Trump got in office 1.0. There's always a lot of excitement, depending upon which side it's coming from, about a new president coming in. It's a new day. It's a new dawn. Like, here we go. America's back. We're going to get back on the right track, right? And there's definitely that feeling out there. So I hate to kind of be, you know, the guy to be a little more cautious on a day like today, right? But I said I'm not nearly as optimistic about Trump 2.0 as I was on Trump 1.0, economic speaking. Here's a thread on what I'm thinking for the next 4 years. 1, corporate taxes. When Trump took over from Obama, he had massive room to bring down corporate taxes. He was able to bring them down from 35% to 21%. Guys, that's 14 extra percentage points in a company's pocket each year. And it's not like it's a one-time thing. It's every year, right? Year after year after year. Versus that money going to the government. It's a huge deal. There was a huge boom to the stock market and corporate earnings. Trump does not have that lever to pull this go round. No. I doubt he's even going to be able to move corporate taxes at all. If he does, maybe he can move it 1% or a couple percent. Like, it's not going to be meaningful at all if he even does move it, which I have doubts if he'll even move it. 2, stock valuations. When Trump took over in 1.0, stock valuations were in a healthy place. Now we're in a stock market that's heavily concentrated. We do know at the top of the market, right? And P's are stretched versus historical norms. Yeah, there's no doubt. I think this is the toughest stock market setup anybody's had since probably Bush came in his first term, right? Because Bush took over, what was that, around 2000-ish? So yeah, I'll say that. Number 3, inflation. This one's very, very important. When Trump took over 1.0, there was no worry about inflation. That was not even like a subject, to be quite frank. Inflation didn't really even start getting talked about in any serious manner until slightly before Rona happened, right? So by that time, we're talking late 2019. Now we have very serious worry of inflation coming back in the back half of 2025 and into 2026. If that happens, things will get very ugly quickly. 4, Fed funds rate. Listen, guys, when Trump took over 1.0, what was the Fed funds rate at that point in time? It was 0.5%. 0.5%. Now it's 4.5%. We're not talking about a small difference. This is a substantial, massive difference. I mean, it's the same as thinking about, imagine, the Fed funds rate's 8.5%. Like, you'd be like, oh my gosh, that's insane, right? Yeah, that's the sort of difference we have between 0.5 and 4.5. If inflation comes back in 6 to 12 months from now, there will be a risk that the Fed could start raising rates again in 2026, and that would be no bueno. How bad would that get if the Fed had to start raising rates again? I can tell you that would get very, very ugly for the stock market, right? We would have quite some drama play out. If investors started becoming convinced that the Fed would have to start raising rates, how much are we talking the stock market would drop? If that became a serious matter, my opinion is the S&P 500 would drop a minimum of 10%. But that's bare minimum. I mean, 20 to 30% is probably more realistic if people really start to factor in, hey, the Fed's about to go through another hike cycle. We're not just talking about one hike. We're talking about several hikes over a period of time. 10, 20, 30%, fast it would happen. But let's see. That's certainly no guarantee, but it's a serious worry, and it's not a worry we had in Trump 1.0. 5, personal income taxes. In Trump 1.0, there was a lot of room for favorable adjustments to be made to personal income taxes. I don't see any major favorable changes coming to income taxes in Trump 2.0. I would gladly welcome it if Trump has some great new tax plan that, my income taxes are going to go down a bunch in the next few years. I don't see it, though. I don't see it. I think that would be pretty much hopium. I would gladly welcome it. Trust me on that with what I pay in taxes, but I don't think that's happening. So don't get your hopes up about that. 6, real estate. When Trump took over 1.0, mortgage rates were cheap. They were. Like, when Trump took over, mortgage rates were in like the 3s, right? And for much of his almost all his entire presidency, mortgage rates were either between the high 2s to like mid 4s, right? His entire presidency, basically. So mortgage rates were cheap and real estate prices were fair. In Trump 2.0, mortgage rates are the highest they've been in 15 plus years, and home prices are sky high when you compare them to incomes. If prices go up more, that will cause a bigger bubble. If prices go down, then what happens? This is a problem, okay? And this is why real estate screws with Trump 2.0 in a substantial way. If real estate prices go up, right, it's going to cause this whole unaffordability crisis to get way worse, right? Let's imagine, real estate prices go up 10, 20% over the next couple years. If you think real estate's unaffordable now, wait till it goes up another 10, 15, 20%. Then it's going to be even more unaffordable, right? But here's the other problem. If we were to talk about real estate prices going down, that's not going to be good either. And the reason that's not going to be good is because you got to remember who owns like the vast majority of real estate. The same type of people that really spend the vast amount of money into the economy. If those folks see their real estate going down month after month, quarter after quarter, year after year, it's not going to make them feel good. They're not going to want to spend as much money in the economy if you see your home price or your home's price going down and down and down, which then would also mean if you have rentals, you're not going to be able to command as high of rents, which also simultaneously makes you not have as much money, not feel as good. In general, your sentiment is going to be lower, right? And those are the people you're really counting on to spending money in the economy. So in regards to the real estate market, the important thing that everybody watching this has to understand is Trump is really set up in a no-win situation this go around when it comes to real estate. It's very important everybody understands that point, okay? 7, commodities. If investors are confident that the economy will be great under Trump, then commodities will pump big in 2025. There's no other way around it. Like, if people become very confident in the economy, things are going to be booming, construction's going to be booming, everything's going to be booming, commodities are going to go through a big bull cycle again. It's as simple as that. If people are very worried, scared about the economy, things aren't going to be good, guess what happens? Commodities go down. So if commodities go on a big bull run in 2025, guess what's going to happen? You're going to see major inflation come back in 2026. Everything that is made in this world ends up coming back to commodities at the end of the day, right? And one of several key reasons we had the crazy high inflation in 2022 was because commodities went through one of the most epic bull cycles you've ever seen in history. From basically the second quarter of 2020 to the second quarter of 2022. That commodities bull cycle was unparalleled, unbelievable moves in basically every single commodity out there. So what am I doing with my money? I'll stay heavily invested in stocks that have underlying companies in which they can produce huge profits in any environment, companies that can grow revenue, margins, net income in any environment. I'll hold $5 to $10 million of real estate. I'll hold another 7 figures plus in cash that's in savings accounts, CD accounts, things like that, right? Now, next thing I want to show you that's very important here, right, is here's the thing you got to understand. Even though I'm not as optimistic about Trump 2.0 as I was Trump 1.0, right, that does not mean we're doomed. That does not mean bad things. We're screwed or anything like that, right? Because here's the thing. Let's say we could even get a 10% gain from the S&P 500 over Trump's 4 years, or a 20% gain. Would that be great? No, that would not be great. But guess what? There's still going to be a lot of money to be made. If you said the S&P 500 goes up 20% over the next 4 years, right? Not a good return. However, there's going to be stocks. If the S&P 500 goes up 20%, there's going to be stocks that perform 60% returns, 80% returns, 150% returns, and 200% returns over the next 4 years, which sounds pretty darn good to me. Even if we got a 30 to 40% return, still would not be good over a 4-year span. However, even if the market returned 30 or 40% over this next 4 years, that would still mean a lot of money is to be made, right? Now, we can say if there's some major crash under Trump's presidency, let's say market crashes in 26 or 27 or something like that, right? There's going to be a lot of money to be made on the downside. And if you know how to hedge your portfolio properly, you're going to make more money than you ever dreamt of in that environment as well. So regardless of whatever happens here, whether the market returns 10 to 20%, 30 to 40%, or maybe it's just as good as Trump 1.0, 66% return, or even better, 80% return, whatever. Or there's a crash like there was under Bush, right, in his first couple years. Regardless, there's going to be a lot of money to be made here. A lot of money to be made. And so, that's the thing you got to understand. Like, that's why I always stay invested. That's why I always stay looking at deals. What do we got out there? Because you got to understand there's going to be a lot of money to be made over this next few years, right? It might just come from different places than it's come from the last few years, right? There's certain stocks that have really performed tremendous over the last few years. We know that. Sometimes it's not always those same stocks. It's going to be a different bunch, right? That's an important thing to keep in mind. So make sure you're taking investing serious. If you want to access all my best premium courses, there'll be pinned comment down there. You can click on that, fill out a form, see if we can get you access to all those best courses, guys, so you can take your investing serious this year, because I can tell you there's going to be a lot of money to be made, plus get access to 1000X stocks and all that good stuff, okay? Alrighty, now that I covered my opinions on Trump's presidency, what am I looking at here? What am I planning on doing with my position? So this is what we're looking at. We're looking at the public account here, right? So Meta's the biggest position, obviously, in the portfolio. It's about 33% of the size, but keep in mind it grew that big because it went up so much. So it's not like I put 33% of my money into it, right? Tesla is around 13.5% position. So Meta and Tesla alone, I mean, they're huge driving forces in that portfolio. We're talking about, 47% of the portfolios in those two stocks, right? And they're two great stocks to own. Are they not? Yes, they are. Then we have PayPal, which is about a 9% position. And that one keeps climbing up. We're now at a $91,000 gain there on PayPal. So that one keeps climbing the way it's climbing. Like, don't be surprised if that's over a 10% portfolio weighting, right? Amazon's over an 8% weight in the portfolio. We have Palantir at about 7.5% weight. Cheesecake Factory is 4.4%. Then we have Elf at 4%, AMD at 3.3%. That one's going to get a lot bigger over this next year. I can tell you that much. A lot bigger. Revolve's about 2.6%. Fubo's 2.4%. Estee Lauder's 2%. SoFi's about 2%. Celsius is 1.8%. Planet is about 1.2%. Obviously a speculative position there. And then Monster is about 0.9%, right? So what are we looking at here? So Meta, to get started with Meta here, I'm looking to potentially, if Meta goes on a nice bull run here, let's call it over the next 6 to 9 months, and let's say makes a move to kind of like that $800 to $900 range, right? I'd be looking to cash like 200 shares of Meta and put it into some of the weaker positions in this particular portfolio. The thing that's tough with Meta is the valuation is still very, very attractive. And even when the stock does make its move to $800 to $900, it still won't be necessarily an expensive stock. And that's why I'm not looking to cash out many shares of the stock. Like if you told me Meta was to go to $1,500 a share this year, I'd feel very different. I'd feel like, let's cash more than 200 shares. I'd say, let's cash maybe 700 shares, right? And get myself down to 1,000 shares this year. But if it just moves to kind of that $800 to $900 range, I'll take some profits. I'll probably cash out like 200 shares and move it into positions that I just think are more well positioned for gains over the next few years. But it's a hard one for me to cash in any substantial way. It really is. I mean, this company's just a flat out beast. You know, oh, I think we're already on the Meta chart here. Yeah, we're already on the Meta chart. I mean, look at this, guys. Look at this. I mean, you know, 117, 120, 126, 134, 142, 149, 156. I mean, it's incredible, right? And this is where we're projected to go based upon analyst expectations over the next few years. You know, we're going to push to $200 billion plus in revenue. And remember, Meta is like, you know, we're talking about, they have the holy grail business model out there. So I wouldn't be surprised to see their margins continue to increase over the next few years. And Zuckerberg's very committed to keeping costs down. You know, obviously they're spending a ton on AI chips. We all know that. But if you look, like they're about to cut their 5% lowest workforce employees. So, I mean, at the end of the day, I think they have room for margin expansion continued over the next several years and net income expansion, right? This is where their earnings per share is right now on a trailing 12-month basis. This is where it's projected to go. There's just a lot of opportunity here. Free cash flow is building out with this one. So, yeah, I mean, at the end of the day, when it comes to Meta, yeah, looking really good there. But I wouldn't mind cashing some shares. Tesla, I'm looking to just hold Tesla regardless of kind of what happens with the stock. I'm down to 1,000 shares this one. Obviously, I've sold the far majority of my Tesla shares over the last number of time, right? And, you know, it's just been a, you know, pretty, I would say, borderline financial game-changing stock. When you got a 3,000% gain on a stock, it's just ridiculous, right? And the amount of profits I've taken over the past few years in Tesla's astronomical. So very thankful for that one, but just looking to hold that one and obviously see how the robotaxi opportunity presents itself. The thing with me with Tesla is I've taken so much in profits that if Tesla completely failed over the next 5 years, it doesn't even matter. It just doesn't. Just because I've taken so much in profits over time that now I'm just like, it's just so house money at this point in time, it doesn't even matter, right? PayPal. So PayPal, looking to maybe cash some PayPal this year if it makes a move to 120 specifically. If it makes a move to 120 and kind of pushes valuation there, I would look to cash some of my shares. And when I say some, I'm talking somewhere between, we can call it 105 shares and potentially like 1,105 shares of PayPal, depending upon how rapidly it moved to 120 and then where it kind of took things from there. So, yeah. Now, looking at PayPal here, forward P of about 19. So, you know, I think it's still very fairly priced, and that's why I'm not looking to cash out any shares at $91. This one has to move to like 120 or above to make me say, okay, let me take a little chips off the table here. But for right now, it just doesn't make sense. I mean, we pull up the charts feature on PayPal. I mean, look at this baby. Just look at this baby, okay? Look at it. You know, it's just consistent growth. And based upon analyst expectations and my expectations, it's just going to continue to be, you know, very impressive growth, consistent growth. And then additionally, the margins should continue to improve and improve and improve. I'm talking gross margins and net margins for this company. Earnings per share should continue to skyrocket over the next few years. Earnings per share, I believe, is going to grow much more rapidly than revenues grow for this one. Look at the free cash flow growth. I mean, it's incredible, you know, how much the free cash flows have increased here recently. So, I mean, PayPal is just looking really, really good. Obviously, their services PayPal, Venmo continue to be top of mind, top used, and then their Braintree side is just an incredible opportunity. So yeah, for that one, hold for now, and we'll call it cash sum 120 plus. Amazon, looking to just hold that one. I don't really care what happens to Amazon. It could go to 300 this year, and I'm just not interested in selling any Amazon. I actually feel like I'm underweight Amazon. I wish I owned more shares. I wish I owned like 1,500 shares instead of 1,100 shares in this portfolio. That's just a hold regardless of what happens. Just there's too many growth levers for that company long term for me to even consider cashing. Palantir, if it made a move to like 100 or maybe 125, certainly if it made a move to 150 this year, I would look to cash some more Palantir. My thought is, if the only way it can make that move, I think, to 100 plus is if they start reporting like 40% plus revenue growth. If they went to that, I think it kind of flips the script and people start considering maybe it's actually undervalued, right? I've run projections on Palantir before, and at 30% growth, the stock doesn't make any sense here. But if you run, revenue growth at 40% a year, 45%, 50%, you could actually make a compelling case that Palantir's a buy here. But the big question is, can Palantir get to those sort of growth rates? And that remains to be seen, right? We just got to let time play out and see some of these earnings in regards to that one. But, that one's just a hold for me, unless, like I said, the stock goes $100 plus, then I could maybe cash out 300 shares or 1,000 shares or something like that. Cheesecake is a buy, so this one I can't even consider selling anytime soon. This one's a buy probably this entire year, just to be quite frank. The company's just so well run, so many growth levers for that company. It's just a buy. I'm underweight the company. I would love that to get to like a 10% position weighting. Elf is a hold and a potential buy. The thing with Elf is they've been executing so well. Analysts come in and doubt Elf, but at the end of the day, like this one's actually, it's a buy, man. It's actually even a buy now. Like I wouldn't mind buying some shares right now of Elf on a shelf. You look at this one, forward P of 33, that might seem rich. Like, oh, look at the market's kind of 18, 26, blah, blah, blah. Listen, Elf's growth rates are not even on the same stratosphere as, these other companies. Like they're a whole other league. I mean, look, you want to see crazy charts? Look at the trailing 12-month on Elf's revenue. You want to see something that's going to flip your flapjacks? Look at that. Look at that growth. Now, analysts have gotten bearish on the company. I think it's going to be, 2025 is going to be a tough year. And we'll see what happens with tariffs and all that, right? And what Trump's going to do as far as all that goes. But the moral of the story is, pretty much everybody that's bet against Elf has lost. And I think that's going to continue to be the name of the game. And I think margins will continue to increase dramatically over this next 4 or 5 years, as well as earnings per share. So, I think to bet against that one, good luck. AMD, strong buy. AMD is incredible buy. And I've spoke about AMD extensively on the channel here recently, so I don't even really want to get super in depth on AMD. I've also spoke about it a lot on the reaction channel. I'm not sure if you guys follow me on the reaction channel, Jeremy Lefebvre Makes Money, but I've spoken about AMD a lot on there as well, so definitely follow me on the reaction channel, Jeremy Lefebvre Makes Money. But yeah, AMD, come on, strong buy. Nike, strong buy. Come on, Nike at $70, give it to me. Like, those are two stocks, AMD and Nike, those are two stocks I root every day that they go down. Every day. And for some of you new investors that might be watching this, be like, oh my gosh, like how's he root against a stock he's got money in? Like, isn't that crazy? No. Here's why. I want to build those out to be bigger positions. I'm continuing to buy those stocks. So I want my shares as cheap as I can possibly get my hands on them right now. So if you told me, would I rather have Nike at $55 today? Yes, absolutely. I'd much rather have Nike at $55. If you told me I could buy AMD at under $100, I would gladly welcome AMD under $100. Like as low as they can possibly go, because I'm a buyer of those stocks. I want the cheapest prices possible. It's like going to, the food store and there's apples there and the apples say 4 for $1. Or they say 2 for $1. Like, what would you rather buy for your family? I think it would be 4 for $1, right? It's a little better deal than 2 for $1. So that's the same exact thought process in the stock market. I'm not a short-term trader. I'm not looking to get in and out of AMD or Nike. I'm a long-term investor. I want my shares as cheap as possible. Both those are strong buys. And like I said, I've spoke about those stocks extensively on the channel here recently. Watch just about any of my recent videos from the past month, and you'll find a lot of AMD talk, a lot of Nike talk. I just kind of banging the table on those two stocks right now, right? Revolve, I might cash some this year. It depends, though. I might just continue to hold. That company they've gotten through a lot over the past few years, and the two co-CEOs of that company, man, they're really dang good. So, yeah, Revolve e-commerce space, clothing related, heavy female demographic, $300-ish average order volume. I really like Revolve. And so great balance sheet at that company, and income statement that's improved dramatically recently, specifically. So if you want to look at Revolve here, RVLV, it's a sneaky stock. Like, no one talks about this, and like hardly anybody owns it, but it's been a good gainer for me over time. Like, look at the gains on Revolve. It's not like I said, it's kind of a sneaky stock. 134% I've gained on this stock, right? That's not too bad. That's not too bad. But when it comes to Revolve, if you look on a trailing 12-month basis, it's clear their business was kind of trending down, but now it's trended back up. But additionally, if you look at margins, it's clear they kind of already troughed and they're improving, right? In this next quarter that they're about to report is going to be the huge quarter because that's the Christmas quarter, right? So you're going to see this gross margin and net margin spike up in a massive way when it comes to Revolve here. But additionally, look at their earnings per share. Like, it was in a pretty bad place for a while there, but it's clear we're back on the right trajectory, and based upon analyst expectations, we got a lot brighter days ahead, and I believe that's what's going to happen. Free cash flow is going to skyrocket over this next bit of time as well, in my personal opinion. So Revolve is a business that's already troughed, and I think has much brighter days ahead. And so for that reason, it's hard for me to even sell any shares. And my only thought is if it went to like $50, like let's say small caps went beast, Revolve's numbers are great this year, and it went to $50, $55, $70, something like that, I might cash like 700 shares, right? Fubo is a hold and potentially a buy. I mean, if that deal goes through with Disney there, I don't know how I don't buy more Fubo shares, actually. So for right now, it's just a hold because I want to make sure the deal goes through. As long as that deal goes through, it's hard not to be a buyer of Fubo. Like, the long-term opportunity there is just so massive. It's insane, right? And so Fubo's looking really, really good, especially here in the threes, like really, really good. Even in the fours, it's looking really, really good. Estee Lauder, $77 stock, so far up $4,000 in this one. Looking to probably buy more Estee Lauder. It's such a great cosmetics company with so many great brands. They've had a brutal last couple of years, really the last 3 years with that business model. I believe that does turn around. I believe these hated stocks like Estee Lauder and Nike, I believe those are the same stocks that a lot of people are going to fall in love with over this next 2 to 3 year span. Like, they are down and out, kicked. No one cares about them. And I believe 2 to 3 years from now, people will love those stocks once again. They'll be talking up Estee Lauder and Nike left and right, right? So Estee Lauder is a buy. SoFi is a hold for me right now, potentially a buy. I'm underweight SoFi. I really wanted to get to 5,000 shares in this portfolio. I only own 3,700. So for right now, I'm just holding. I'm hoping the stock dips. I'm hoping something freaks people out on earnings and the stock goes down to $15, $14. But I'm actually very fearful that SoFi could spike to 20 plus in the short term. Very fearful of that. I hope it doesn't happen, but I'm very fearful. Like, that one just seems like it is poised to continue to move up significantly. So we'll see. Celsius is a buy for me right now. I don't want to buy a ton more Celsius shares, but I do want to buy some more Celsius shares. Planet's a hold for me right now. A hold and then probably a buy. But I got to see what's going on in Florida. They have a significant business in Florida. I got to see what the numbers are looking like for the Florida business, and then I'm going to kind of figure out things from there. If Florida's not looking too bad in the next couple quarters, I'll buy some Planet shares. I mean, it's 37 cents a share. The company's pretty down and out, right? But Vegas Store looks like it's doing as good as it's ever done. Like, I think Vegas Store is looking really, really good, and that's their superstore, right? Monster, buy as well. I don't want to buy a ton more Monster, but I would like to buy some more shares of Monster along with Celsius here. So that's kind of what we're looking at there. Now, do keep in mind this portfolio does receive dividends. So if you know my strategy, it's GVD, growth, value, dividends. I focus a little more on growth stocks and value and divs, but that being said, I own a lot of value and dividend stocks as well. So this particular portfolio has 4 positions that pay me dividends. So basically my Meta should pay me $3,400 in the next year in dividends. Cake's going to pay me over $3,000. Nike's going to pay me $2,200, and then Estee Lauder is going to pay me $1,100. Now, something to keep in mind is I'm going to probably make way more money than what it says here. I'm going to likely make 5 figures plus in dividends in 2025 from these stocks. Why? Well, several of these stocks I'm going to probably be buying more shares of. So naturally, it's going to make my dividends go up. Like Cake, I'm not done buying. Nike, I'm not done buying. Estee Lauder, I'm not done buying, right? And so it says I'm going to get a $9,794 payment of dividends this year in the public account, right? But I'm going to make a lot more in that. And then additionally, I would say probably all these stocks are going to raise their dividend in 2025. I think Meta is almost a guarantee that they'll raise their dividend in 25. Cake, I think there's a super high probability they'll go up on their dividend in 2025 because their business is looking really good. Nike, they're kind of turning the ship around, but I still wouldn't be surprised if they, raise dividend at least a little bit. And Estee Lauder, now that they're going to get that ship turned around in 25, I wouldn't be surprised if they raise a little bit as well. I would say Cake and Meta are more high probability. So I'll end up making 5 figures plus in just dividend income in this portfolio in 2025. So that's going to be nice, right, to go ahead and redeploy that out. Now what I'm showing you right now is this is calculated all by Fidelity Investments, right, the most respected brokerage in the world. So Fidelity has us at a time-weighted return for the public account of 25% per year, right? And a money-weighted rate of return over the past 5 years of 24.8%. Those are the numbers I care about. I always want to care about 5-year returns and 10-year returns. This portfolio hasn't even been around 10 years, so we don't have 10-year returns yet. We'll get those in probably 2 or 3 years from now, right? Which I can't wait for my 10-year returns against the market. It's going to just be epic. But in terms of that, even if you look at money weighted rate of return, 24.8% per year over the past 5 years. That's versus S&P 500 of 14%. That's versus the Dow Jones of 13%. That's versus the bond index at negative 0.3%. What a disaster. And that's versus municipal bond index at 0.99% per year, right? So I cannot be more thrilled and happy with the performance of the public account. And, hard work pays off. That's all I'll say about that. Hard work pays off, right? Now, additionally, I want you guys to understand, build a portfolio you'll be proud of years from now, right? Because this is one of the biggest things I would say for 2025. There's going to be drama. There's going to be FOMO that happens, right? There's also going to be desperation that happens. There's going to be all these feelings, right? And then when you add Trump in the mix, it just adds like super fuel on that, right? And when you add higher valuations on the market, that's like more fuel to the fire of like craziness and like all this thought process, this and that. At the end of the day, focus is very simple. This can be a very simple game, or you can way overcomplicate it. You can way overcomplicate it by trying to get in and out of the market and trying to get in and out of stocks, blah, 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 right? Or you can keep it very simple. I want to buy great companies that are going to have far bigger net incomes and revenues and margins 3 years from now than they do today, regardless of the environment, right? And then when those companies reach fair value or overvalue, I'll sell a little bit of shares. I'll take some off the table and I'll redeploy that into other opportunities in the market, right? It could be a very simple game, and that's the way I play the game. Or you can make this way more complicated and try to time in and out of the market and, all this crap. Like, don't go down that path. It's not a good path. Focus on building a portfolio you're going to be proud of 3 years from now, 5 years from now, 7 years from now. You're going to look back and you're going to pat yourself in the back and say, dang, man, we built a full portfolio, 10, 15, 20 stocks, great companies, great assets that I'm a proud owner of for the next many years. They're going to have far bigger revenues, profits, all those sorts of things, right? That's what you want to do in this game. So then you can build out a portfolio that hopefully scales to 6 figures, multi-6 figures, 7 figures, multi-7 figures, 8 figures, right? And kind of keep it taking it up from there. So if this is your year to take investing serious, you want to apply to join a private group, pin comment down there, click on that, fill out a form. We'll see if we can get you access to that in the next week. Don't keep putting off taking investing serious, man. Put it off for another year, another year, another year. You're never going to get in this game. You're never going to get building your wealth. You're never going to scale your portfolios. Don't do that, man. Let's take this thing serious now. Let's get in those course curriculums. Let's get you learning. Let's get you up to a high level. Let's get you using the best research platform in the world in 1000x stocks, right? Let's take this up, okay? Alrighty, guys. Much love as always, and have a great day.